Well, now let's quickly dive into our next session, the fireside chat, evolution of due diligence in fintech investments, ensuring robust assurance. And let's welcome our speaker for this session, Ms. Arpita Pal Agarwal, Managing Director, Dia Vikas Capital. Let's hear it louder and let's welcome here on stage, ladies and gentlemen. And our moderator for this session, yes, Sashank is right here with us. Thank you.
So thank you, Arpita, with being with us. And I think you are one of the very interesting fund. So I think I'll request everyone to settle down and you can catch up with Neeraj and Arpita in the function area. But request everyone to settle down, please. Yeah, thanks. Thanks, Arpita. So why don't you just talk about a bit, introduce yourself and talk about the fund itself, right? Because that's very interesting. Like you are trying to look for the fintechs who are trying to have an impact, right? So if you can just talk about bit.
Sure. This is working? Yeah. Good morning, everybody. I'm Arpita Pal Agarwal, and I head this company called Dia Vikas Capital. We are impact investors. And by impact investors, what I mean is that besides financial returns, which could be modest, we also look for social returns. So where an organization where we invest creates impact and reaches typically the bottom of the pyramid. So the kind of conversation that was happening in the earlier session about small enterprises, people below certain level of income, lower middle class, that's what we work in. And so far we've been in India for 20 years and have invested in more than 20 microfinance institutions. And now we are moving towards looking at investments in more digitally enabled companies. So that's a quick background.
Thanks, Arpita. I think due diligence is a very critical aspect when any investors are looking for kind of the investment into a startup, and especially when you talk about the fintech, when we are talking about it, right? And due diligence not only about that looking like the checking about the founders and only limiting to the business model, but the technology, because fintechs and everybody is driven through the technologies, right? So primarily how the technology is supporting the business model. And all the aspects, the viability, future viabilities, and all this aspect, right? You're not, when you are making an investment, you're not looking in the today's, right? And then you're primarily looking into future, right? So, Arpita, so in that context, when you are and your team takes a decisions, what are the aspects that you want to touch upon that and get that comfort feeling? And am I right? You can correct me that you are looking more from the future, right? 3 years, 5 years down the line. That so, if you can just throw some light onto that aspect, that what you look into that.
Sure. So like I was saying, typically institutions like us have the capability to look at the financial statements, business plans, etc. But as we pivot towards investing in more digitally enabled, tech-enabled businesses, I think what is very critical for us is to get assurance first about the technology architecture that the investee company has set up and is working with. Because the architecture should be able to be flexible enough to not only work in the current business plan, but support innovations in the future, right? Shashank, we've talked about this. Yeah. The other thing is the platform capability itself overall, in terms of what is the business plan, what revenues is it projecting? Is it going to be able to support that kind of growth, revenues, future, similarly cost aspects in technology? What are the capital, capex, or opex aspects of it? These are two very critical things. But besides that, also it's very important in the context of where we are today, regulatory compliance, because we invest in supervised entities, regulated entities which are with RBI, right? So there are all these annual inspections, cybersecurity inspections. So where is the company in that space? How compliant is the systems there? Do they have the wherewithal and the right processes in place to look at those compliances? So some of these are very, very important aspects that we want to look at, and sometimes we take external help because this is not something that we have capability on in-house.
No, thanks, Arpita. And I'll add to that. When we are talking about the technology supporting that business model, right, it's very critical to look into the multiple dimensions, like, and you touched upon some of the dimensions like platforms. So what are the tech stack that they're using? And the core platform, like if you're lending, what is that entire your loan management platforms, loan origination platforms are there, and how they are designed to acquire that customer, which you are acquiring right now, and up to 5 years that volume goes up, and how you will to acquire that with the same architecture that you have been placing, that same platform that you have designed. And so that's where that architecture start playing a much bigger role into that, trying to visualize that scale, the volumes that it's able to support, right?
In fact, Shashank, I would like to add one other thing which I've missed mentioning, the customer, the end customer who is getting this credit product, right? If you're looking at a digitally enabled model, typically either they would, the credit would be happening through a self-serve model where the end client would need to fill some data and get that provide that information, or they could be, going through partners, etc. So there are two aspects to it. One, how easily the platform is able to provide the APIs for other people to rely on. For example, if you're giving credit, there will be repayments. So how easily can the platform and the technology architecture allow the new payment options that are coming up? Because it's very important that is there. They are easily able to plug that in. And the second is customer experience. I've just taken a flight. I was at the Uber terminal. It was a disaster, So they're a technology platform, right? But it's a disaster. So, and nowhere should we feel that because we are going to be lending to, small or medium enterprises or to people who are not so rich or not so well off, their experience can be poor. It can't be, right? So I think these are additional aspects that need to be taken care of, that the platform should be able to allow other providers to come in, to provide easy integrable APIs. The experience has to be very important. So that's there. Of course, we've talked about regulatory compliance. And I think one very important aspect which will come into play is the new Digital Data Personal Act, right? It has not, it has been passed by a parliament in August, but hasn't come into play. How will that play out? How will the investee actually secure that data? And somewhere I was reading it, they have to make very potent and solid agreements with data sharing agreements with their vendors. So if they're using a cloud provider, they have to make sure that data doesn't leak out of there. So I think there's a whole host of issues in this which needs to be looked at.
No, apparently, and when you are talking about the digital personal data protection bill, it's an act by the government, so everybody has to follow. It's not that RBI is not to follow.
Absolutely.
So even if you are a small companies or the large company, everybody have to follow. Rightly said that. So just going to the customer point, I think what you bring the very important point that it's not only the onboarding and also that servicing part of it. And typically the segment that you're trying to work, how the fintechs who is working with this kind of the customers able to engage, right, able to serve them through the digitally, because these customers are not too habituated to the digital interfaces.
Too savvy.
So, so how do you try to look at it from their technology or the overall business model diligence perspective? That is the fintech will be able to sustain the communication, the engagement with the customers.
Yeah, no, absolutely. And I think, again, it's part of the customer experience of, how do you engage with them, because they're not so savvy, yet they want to be. They're the largest consumers of, gaming, YouTubes now as a aggregate segment, right? But since here money will be involved, they'll be lent money and they will have to return that money. And basis that, first time they will get onto the formal credit system. So it's very important that even the interface, for example, it has to be in vernacular, there has to be literacy programs run. So there's a whole host of issues there as well that needs to be taken care of.
Absolutely. So in fact, I'll also move that from the customers now and try to get into the more fintech part of it. And one is definitely the tech, but the people behind the tech, who are building the tech, and not only that, how this founders and also they're involved into tech, right? Building the strategy for the next 3 years, 5 years. Is their tech, are they completely aligned with their techs? Becomes very critical, right? Like a founder, co-founder, because many of them may not be coming from the tech background. There are techies who are building the platform, but there are large fintechs where that founders or co-founders may not be coming from the tech background. But how they are closely working with the tech in terms of the current business model as well as the long-term business model becomes very critical. So when you try to look at the due diligence process for the investment, what are the things that you try to figure it out from the founders and the senior management large in terms of their technologies approach?
Yeah, no, I think very pertinent question, Shashank. When we are looking at investing, when I engage with the promoters, when I'm saying promoter and the top management group that is driving that company, I'm looking at understanding their background. Some of them are techies who are trying to do financial services. Typically, I'm being very black and white here, but they are techies who are trying to do financial services, or they are financial service veterans who are going to be using technology in a business model that they have hit upon or want to do. So I think the team has to have both in place. So the promoter might be one or the other, but the top team has to have both, because end of the day, if you're trying to set up a fintech or a digitally enabled financial business, I prefer to call it that, because fintech is a little abused word in these days, sometimes taken in a wrong connotation. So in that case, it's very critical that end of the day, technology is seen as an enabler. And the right processes, the right controls and mechanisms need to be set up with the right regulatory compliance and all of the other things that we discussed so far. So I think both are very critical, and one can't do without other if you are in the fintech space and the digitally enabled space.
No, absolutely, very rightly said. And you already touched upon some of this critical part, data security and the privacy part of it. And typically, fintechs, since most of the fintechs, even those who are NBFCs licenses, may not be in the upper bracket, so they are not typically under the regulatory supervisions. And they may not have the CISO also. Most of them may not have the security team, the CISO, or the risk team, or the compliance team. So it's become very difficult that they are totally adhering to the guidelines which is there from RBI. They are not bound by, but they are not looking at it into it. But how do you try to see that, okay, they are trying to adhere to some of the security? There's a very basic kind of the basics of the business, that you are protecting the customer data. But many times I've seen on platforms where that entire production environment, developer has pulled up the replica on the laptop, and the customer data is available on the laptop, right? So when you're trying to do a due diligence, how much emphasis you try to put on that are the teams as well as the technology is designed in such a way that security is being appropriately taken care of it, and also extending the regulatory compliance like DLG. Now the digital lending guidelines has come into picture, where that responsibility lies with the fintech also who is working. They need to comply with. So how do you try to see that they are adhering to the security as well as the compliance requirement when they don't have anybody there?
Yeah, so again, very relevant question, but one clarification, we invest in only regulated entities. So, but the moment we say that, we are obviously making sure that the management team we are working with believes in compliance, believes in staying on the right side of the law. So, and if you are equity investor, we do both equity and debt. But if you are equity investor, we take board positions typically. Through board, there is a governance process where RBI reports are coming in, you're asking about compliances, etc. So I think those, there has to be an entire governance process in the company, a technology governance process, and at the board level, an overall governance process where you're asking the right questions as to, is this getting done, what is happening, etc. And that gives a very good flavor of how's the governance environment in the company. And then, of course, there are checks and balances that we build into our agreements with the investees.
No, I think very pertinent point that you brought it. It's not only about that looking at that what is there in the technology, what kind of a configuration are there, is there firewall not there, is there security policy not there, but more it was also to try to listen to the founders and all this thing, how much they respect have there for the security policies, the regulatory guidelines. Because the moment you start experiencing that they are sharing that their concern for those, typically you will have some kind of assurance that they will be telling the team to make sure that the compliance is there. If the governance issue is not at the top level, technology and security governance, definitely chances are that missing with that process, right? So this is fine. This is definitely. But what are the other aspects? Like look at it. Like, say, for example, data accuracy. That's always a challenge, right? Because many a times, not only with the fintech, I'm not trying to undermine the fintech and all this thing. Many of the other businesses also, even the regulated, sometimes chances will be there the manipulation of the data, not maintaining the data records. Especially there is a fintech partnership, bank fintech partnership are there. What kind of data is there at the bank side? What kind of data is the fintech side? Typically in these scenarios, data accuracy of the data. I will not use the word data manipulation, but the accuracy of the data to be ensured. So is it also a part of your due diligence typically process that the data accuracy part need to be validated?
Yeah, absolutely. Thanks for reminding me of that, Shashank. That's a very important part. In fact, what we do is we try up data points at different aspects. So we are looking at how the flow of data is happening when a new customer is onboarded, right from the KYC to how the credit underwriting was, and what is those records showing up in the loan management system, right? So that is there, and then how that entire loan management system is showing up in the audited accounts. So, and then if there's a partner and it's being shared with, we pull out that data. So it's like teeing up various data points, and if we've hired somebody else to do it, we also put that as part of a scope of work to at least do a sample. Can't do the whole thing, but as an indicative sample of this. So trying to tee up data points, a similar data point, which could be part of a larger aggregated statutory accounts of the investee, but teeing up at different levels. So how it's collected at the customer, handled at a partner, then in the loan management system, how it's been, and then how does it show up into the actual accounts of the company. So I think that those are different ways we tee it up and make sure that if there is a discrepancy, then we go back and ask them the questions, and that's part of the diligence process.
So this was the part, Arpita, probably pre-investment, but nobody typically talk about the post-investment part of it. So once you have made the investment, you are part of the team. How do you try to make sure that whatever the kind of the technologies, landscape, the roadmap they have built it, the sustenance of the data security, the governance framework, the data management frameworks, and all these things be ensured because more the fintechs start scaling up, the risk start increasing up. So how do you take care of those aspects when you are with them, right?
As
when
a monitoring of the investments.
Monitoring aspect, yeah.
So, like I said, if we have a significant enough stake to be on the board, or alternative, a smaller stake, then we are board observer. And otherwise, we set up these reporting mechanisms where the investee at a particular quarterly or a 6-monthly frequency will be sharing reports, right? We get loan portfolio audits done, which is done by an independent third party that gives, on the technology side, with these reporting, we are constantly making sure that through the reports that are coming to us or when we are sitting on the board that, what are the new products or revenue streams that the company is looking at, what is the commensurate cost elements to it, is it getting accounted? So I think it's a constant process of multifarious, and plus we have our teams, we'll do our own, we go to the fields, keep working with the partners. So it's not like we put in the money and forget about it.
Absolutely.
So it's a constant
it can't happen
process.
because you have made some commitment and that's why you are there.
Yeah.
And in fact, also I've seen the scenarios where that any new regulation comes up, that investment firms come to us and they can you just go and make it a quick checks like DLG guidelines came, right? So after 3 months, can you just make a quick check and then try to make sure that are they adhering to the policy and all this?
No, to that, for example, RBI came up with scale-based regulations recently, right? And they bucketed NBFCs in different manner. So sitting at the board, I'm asking, not only me, the other board members, we're asking them to do a third-party independent audit and get with what is the status of where is the gap, what is the action plan, then we ask to the management. So I think that's a part of the monitoring process that keeps going on whenever a large regulation comes in which impacts across the organization.
No, absolutely, absolutely. I think what you said, right. In fact, that's why we have also aligned with what Arpita is talking about, the investor expectations, right? And that's why we work very closely with the fintech, those who are coming to this investment purpose, right? So that's why we work. But every stage of the fintech investment has its own different layer of the due diligence process. Like say early stage, okay, your expectation with respect to technology due diligence may be different. Like because you try to look at that, okay, do they have the capabilities to build it up, right? But when you are trying to move into the growth stage of the startups, you start looking that they can they sustain? Is that platform which has been designed that is completely supporting it, the current technology stack that you have designed it, and that also the future growth perspective. So that's where you start looking into, and then try to balance in the whole process of the policies and processes and with the risk management process. But with this, I think it's interesting dimension that we have got to able to discuss on the due diligence process before the investment with respect to fintech comes. So thank you, Arpita. Thank you for being with us, and thank you for
having
supporting
me.
us.
Yeah.
Thank you very much.